All right, everyone. Welcome back to the channel. This is going to be the weekly review for the Christmas week of December 2025. So before we begin, let's just pray. God, I just give you thanks again for all your blessings and for your goodness. Thank you for bringing us to this point in our trading experience where we saw the end of another trading year. I pray that you'll meet anyone watching this video. May it be instrumental in helping them to improve, and may we continue to understand the process moving forward. We pray. Amen. All right, guys. As you know it, last trading week was a very shortened session. It was the Christmas week. So of course, we had a shortened trading day on Christmas Eve. Um we lost Christmas Day, and we resumed on Friday, December 26th. So I'm just gonna go through and just to mention what happened all of last week. All right. So let me just jump on and I'll show you the charts. So of course, going into Monday, we saw that the market started off with the usual higher low. It went up and it made higher highs. So it was higher lows, higher highs, higher lows, higher highs on the 1 hour time frame. Now, one thing that you have to notice is that you remember that the previous week, the market was making lower highs, lower lows, lower highs, lower lows on the 1 hour time frame. Now, remember, it is common for your smaller time frame to actually break structure and show you a bearish setup in order to create that larger, higher low, which is what you need to continue towards the trend buy, which is higher lows to higher highs. Now, the other thing that I want to point out, and I think I mentioned it in a previous video, remember that last week's trading session, not this current week that just ended, not Christmas week, but the week before, the last full trading week of the year, you saw that although the market was making lower highs, lower lows, lower highs, lower lows on the 1 hour and the 2 hour time frame, it was still consolidating between these 2 points, which was your last low, which was a higher low, and your all-time high. So all of this activity right here, 2 weeks ago, last full trading week of the year, was actually a consolidated move in the upper level of the structure. So again, last higher low to higher high, which is the all-time high. Following week, market consolidated in between these 2 points. So here's your low, here's your high. Price consolidated all of this week in between these 2 points. Okay. Now, moving on to Christmas week. Now, again, what we saw was more of the same, just in a reversed manner. Okay. So now you saw higher lows, higher highs on the 1 hour time frame. However, all of those higher lows, higher highs happened within the same range. So this was your low, this was your high. Notice price did not come up and break the all-time high. So all that consolidation for the last 2 weeks happened in between the last higher low and the all-time high, which was the higher high. Okay. Now, let's look at the moves real closely. So again, I'm on my 1 hour. So of course, market came down, it made this higher low right here. Okay. Then notice it pushed up and it made this high. Okay. This new high. Okay. Remember, when you're looking at your smaller time frames, in this case, the 1 hour, this high only will translate to a lower high on your larger time frames. So let me use my tool and mark this high right here. This high right here would reflect on the 2 hour, possibly on the 3 hour as a lower high. So a high, new high on the 1 hour, on the 2 hour, on your 3 hour and above, it will reflect as a lower high. So let's go ahead and check it. So if you look at your 2 hour, that point there was a new high. If you look at your 3 hour, okay, on your 3 hour, that point right here registered also as a high. It just broke that high right here. So it was not until you went up to, I think, about the 7 hour that you saw the lower high starting to show. So if we do the backtest tool, so we start new and we go here. There you go. You have the lower high that was represented on that 7 hour time frame. So your smaller time frames, your 1, your 2, your 3, and your 4 hour would show you highs. However, when you look at your larger time frames, you start getting up to your 7 hour, your 8 hour, your 9 hour, all the way up until like your 23 hour. That's when you start to see the lower high being printed on those larger time frames. So your 1 hour, as you see, will show you, as it did last week, it will show you higher lows to higher highs. Okay? Higher lows to higher highs on those smaller time frames. Okay. However, when you look at it in context to your largest time frame, you'll still see that those higher highs that are being printed on your 1 hour time frame are only lower highs on that large time frame. So I really hope that's clear for you right there. So again, remember, consolidation. Why is it called consolidation? Because the moves, all of these moves are happening in between the last low and the last high that was made on your largest time frame. So to see this more clearly, let's go and look at a time frame like the 11-hour time frame. Okay. Now remember, I mentioned to you, anytime that you see the market printing higher lows to lower highs, higher lows to lower highs, okay, that means the market is in consolidation. Anytime you see a lower high and a higher low following each other, that simply means that the market is consolidating in that particular range. So right here, your 11-hour time frame tells you the story. The market is still consolidating. Okay. Now, when you look at your larger scheme of things, this was your low on your 11-hour. This was your high. Okay. All these moves in between these 2 points right here, higher low, lower high, consolidation moves. So everything is happening in between the last low and the last high that was made. All right. So you have to apply the same concept with every time frame that you're analyzing. And remember, you always start analyzing from your largest time frame down to your smallest time frame. All right. Going back to our 1 hour time frame so we can look at the trades for last week. So here we go. So here we are. We started with this higher low. We went up, we made a high. Okay. Case in point, this is where you take profits. Remember, you enter on your higher lows, you take profits on your highs. Okay. All right. So you would have been out of this market right here because you'd have made profit right here. Okay. Now you're waiting because remember, you're taking your higher lows. Remember, you are buying. It's a bullish instrument. So you're always buying. That's your safest trade. You will never lose your trade once you are taking your trades from your largest higher low. So here we go. Higher low again, lower high. This is a consolidation move. So you're out of this trade right here. Okay. Didn't go up to make a higher high as you would have wanted it to show you that the market is in trend. This tells you right here, higher low, lower high. Take your profit and you wait. This low that would come right here, that you see right here, is going to be a higher low on one of your larger time frames. So again, here we go. We mark this. Okay. And then we go back and then we check the larger time frames. On your 2 hour, that's a higher low right there. There you go. That's a higher low right there. So if you look at your 1 hour and you got this low, all right, it's a higher low on your 2 hour time frame. Not only that, it's also a segmented low. I did a video a couple of months ago telling you the difference between direct lows and segmented lows and everything like that. So this here is a segmented low, which is the higher low that you saw on the 2-hour time frame. Now remember, again, it's higher lows to higher highs. So which means if this is a higher low right here, you stay in this trade and you're going all the way up until you make a higher high. It's as simple as that. Okay, so from this low right here, you're now at a high. Okay, take your profits right here. Okay, you wait again, higher low. Market went up, you had some volatility on this particular day, Wednesday. Notice it came down, even went below the lowest point right here, but only to shoot right back up to go straight to that higher high. So if you take this point, you put it right here, you'll see that on a 2-hour time frame, which was the higher low that you actually saw, right? You'd see that it actually went straight up and it made that higher high. So the market is in fact in trend, higher low to higher high. Okay. Now, with regards to the whole Santa rally, and like I mentioned to you, a lot of people have been, throwing terms out there and saying they're waiting on a Santa rally and they're waiting on different things without clearly understanding what it is that they're waiting on. Now, every single rally that the market makes is going to start from a higher low. You're in a bullish instrument, which means every higher high must start from a higher low. You cannot find a higher high anywhere in the market that has not started from a higher low. Nowhere. So if you find a higher high printed anywhere on any time frame and it says higher high, it must have started with a higher low. Okay? So the fact that I mentioned, I mentioned in one of my commentaries last week that the Santa rally actually started from the beginning part of December, around about the 2nd of December. Here we go. This is in December. Look at the price. It's been going up ever since with all the volatility and the consolidation and the retracements. It has gone up ever since. This was the 2nd of December. So if we take a trend line and we draw from here, look at where the price is. Connect the 2 points. Look at where the price is. That's it right there. That's your price. Yes, you had a couple of times when price broke below the trend line. However, guess what? It was only temporary. And that is why I mentioned to you in my videos, every sell that the US 30 and the NASDAQ 100 makes, it's only a temporary retracement to make the next higher low. And once the market makes the next largest higher low, you are going to move straight up until you get to another all-time high. All right. So I hope that that's clear for you guys right there. So here we go. So this is where now things got a little tricky. Of course, you had the Christmas day, you lost a day and a half, you had a lot of volatility and everything like that. Now, notice price came up, okay? It tried after Christmas to go up. Excuse me. It tried after Christmas to go up and break the all-time high, but failed because you had an overbought higher high right here on your 2-hour. However, when you go to a larger time frame, like your 3-hour time frame, you'll notice that you had a lower high. Okay. Now, does this mean that the market is going to reverse? There's a possibility. It may reverse to come back down to create a new low, which is going to be a higher low on like your daily time frame before going up again. Remember, that's what the market does. Each time the market needs to go and make a higher high, it must do it from a higher low. Okay? So it would not be uncommon or it would not be unreasonable for this market to retrace, to come back down here, to actually continue up. However, because you are only buying from your largest higher low, okay, you're not scared of retracements, because every time when you get a lower high that is fulfilled on your largest time frame, it means that you're going to take your profit. Okay, so if I went in and I took a higher low right here, so let's say, for example, I took a higher low right here. Okay, I'm expecting that I'm going to go up to make a higher high. However, when you look, and I will talk more about this in the analysis video for next week, which is going to be my next video. Okay. What you want to look at is how the previous 2 points have been formed. So you have a lower high and you have a higher low right here. Clear consolidation. Also, the fact that it's coming from an all-time high, that tells you that the market has to do some amount of retracement in order to create the next higher low. If this was your higher high, it means it was coming from a higher low. Okay, so it went higher low, higher high. Guess what? You need a higher low in order to buy to your next higher high. All right, and I'll go more into that and talk to you about what I'm expecting for the last couple of days for the trading year into next year, and also looking at projections for 2026. All right, so let's go back to this. So back to last week. So here we go. We had the higher low, higher high, higher low, higher high, higher low. You had a lower high. Now you have a new low. Okay, and this is what you call an interruption in structure. Now, those of you who follow me on TikTok, I did a diagram which I'll just fast forward to, and I'll show it to you right here. Okay, this is how you know when a market is in retracement. So if you're in the trend and you have a new low to a new high, okay, this signals that the market wants to go in a bullish trend. But you must have two confirmations. First confirmation is going to be the higher low. Second confirmation is going to be your higher high. And then it continues. Higher lows, higher highs, higher lows, higher highs. That's a full bullish trend. Okay? One way to know that the market is going to reverse, and like I said, it's easier said than done, because you're going to have to know your instrument so much that you understand what kind of retracement it is showing. But one common way to identify retracement is the reverse of this. So you have a new low, then you have a new high, then you have a higher low, higher high. This is actually a complete trend right here. Then you have another higher low. Okay, so the next natural move is supposed to be a higher high. However, if you only have a lower high, okay, that's an interruption in structure. Okay, that tells you that the market is not fully committed to continuing with the higher lows to higher highs trend. So you have a lower high, and then from that lower high, you now have a new low. That signals to you that, hey, you know what? I may be interested in actually going bearish. However, because you're in a bullish instrument and you're always going to be bullish, you need to now look at your larger time frame to see if this new low actually created a higher low on a larger time frame. Okay, so that's how you actually avoid bear traps. Okay, because if you went into this thinking that the market is actually going to go lower highs, lower lows, which happens sometimes. Okay, so if you went in here and you said, okay, fine, you had a new low, and then you went up and you had a lower high, and then you now had a lower low, okay, and then you had lower high, lower low. That's now a bearish bear structure on a particular time frame. However, sometimes what happens is, let's just get this off here. Sometimes what happens is that the market will, when it makes a new low and it goes up, it can make a lower high, and then it comes back and it makes another higher low, and then this time it goes up and it makes a higher high, and then it continues higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. Okay, that's one option. Another option that can happen, it can make a new low right here. Okay, and then what happens? It goes straight up and goes right back and makes a new high. Okay, so you have to be aware of every single scenario that the market is throwing at you. All right. Now, just to finalize everything as it relates to what's going on for this week. As you saw here, you still had your higher lows, higher highs on your 1 hour time frame. However, The market did not break to give you another all-time high. What it did, it came and it stopped short by giving you a lower high on Friday. Yes, Friday. You stopped at a lower high and then it actually created a new low on your 1 hour, excuse me, which was a higher low on your 2 hour time frame. Okay, so now you have to wait to see exactly what is going to happen in the market. The market is clearly still in some amount of consolidation, but it still gave you that Santa rally that a lot of people were waiting on and missed. A lot of people did not see that Santa rally that they were waiting on. Why? Because they're expecting this big giant push to happen all at once. No, the market does not do that all the time. What it will do, it will gradually retrace, set up that higher low, which it actually did. And let's show you right here. This higher low was actually a higher low on your H23 time frame. It's right here. That's the higher low right here. Okay, so it gave you that higher low. So now you're expecting to see a higher high. Okay, but if you notice, if you look at your largest time frame, look at it. This was actually the Santa rally that most people missed. It's right here, played out for you. But the reason why most people missed it was that you're spending too much time on your smaller time frames to actually even understand what's happening on your larger time frames. Because this move right here, here you go, it goes straight up. However, when you look at your smaller time frames, that move is actually going to be played out with a lot of consolidation. So here we go. Here it is. So it went up, it did all of this. People got confused, all of here, all of this. But guess what? You see why I say the higher lows are always guaranteed, higher lows to higher highs, because you started here and with all the retracement, consolidation, and volatility, price still ended up here. All right. So that was basically it for this Christmas week. You know, a lot of people got frustrated that the market was showing them nothing and the market was dead and it's stupid and all this kinds of stuff. A lot of people were upset. But guess what? Remember this. The market is always bullish, and as such, it buys from the largest higher lows. Okay? The market was consolidating. It consolidated a week before. You had what is known as a bearish consolidation, okay? Which means it's a consolidation that was bearish in orientation. This week, you had a bullish consolidation, which is a consolidation that was geared towards the side of the bulls. Still did not break the consolidation point, which was the previous all-time high, but it consolidated between your last low and your last high. All right. And looking at your 1 hour, you see that more clearly right here. All right. So it was a consolidation that was geared more towards the bulls. This was a consolidation that was geared more towards the bears. Okay. What are we going to see next week? That's going to be in my next video. So thank you guys for watching. I hope that this video actually shed some light on what you actually saw this week as it related to my analysis video that I posted. And guys, if this content is helping you, please like, share, and subscribe so we can grow this channel together and everything like that. I charge nothing for this. This is nothing here to get any subscription so you can pay me a fee or anything like that. No, I'm just sharing my views based on what I see on the market, based on what has helped me in the past. So thank you guys again for watching. Stay tuned. The next video that I'm going to be posting is going to be my analysis for the last few days of 2025 moving into 2026. So again, God, we just give you thanks and praise for your goodness. Thank you for the ability that we have to trade. Please continue to be with us, help us to improve. Be it those watching this video, may it be instrumental in helping somebody to improve their process. We thank you and we love you. Amen. All right, guys, take care and I'll see you next time. Bye-bye.